All right, so we are live here. Hope everybody's having a good afternoon. And where to even start with this market here? How you doing, Mac? Kevin? How's it going? Yeah, that's it does look like market maker stuff, but either way you look at it, this is not healthy for bulls or bears. So NASDAQ up 7.38% year via the triple Q. The S&P up 5.5%. I think I read best day since I want to say it was April 2020. And that was coming off of, an absolute collapse. If you guys caught the video yesterday, I said that I was a little concerned here as a bear because they really snuck this move here in the last hour yesterday on TLT. And, I've been harping about bonds for quite a while now. And I saw TLT starting to bid up in the last hour. And yesterday, really, the 2-year was actually pretty strong all day long. This is yesterday. We had bull flagged, and in the last hour or two of the day, it started to bid up. And I said, this is happening as XLE is fading with the market. And yields were up yesterday, and XLE was down. And I said, this could be something like the market's pricing in a slowdown, of CPI. And I mean, you almost got to think that this thing had to have been leaked, right? I mean, that me seeing that yesterday, seeing things that were positively correlated with yields, not running up with yields, and then seeing bonds bid ahead of the close yesterday. I said in the video, I was like, it's almost like so we were down on the spiders yesterday. It's almost like they were like, hey, look at the front door. The spiders are down 2%. This is going on. And then the back door, they're sneaking in this bond bid in the last couple of minutes. So it looks like somebody leaked it. Big surprise, right? But that's what we have. Now, as far as this move, a lot of people were short, obviously. What was it? There's via the put call ratio hit a high since 2008 yesterday. So there was hedges out there, but you got to figure those hedges are done now. It's kind of like a one-day thing. And if we look at the VIX, it's not like the VIX was really elevated coming into this. It was actually down, and now it's down more. And it's holding this trend line for now. I don't know what it does tomorrow. I don't think this is. I mean, I wouldn't rule it out. But in this market, I mean, yeah, there could be a fake out if they hold that trend line, but it would have to come tomorrow. I'm of the opinion that we're probably going to go up and test 400 at least, because we finally got that close above, 3,900 or 390 on the SPY, and that has been a level that the market struggled with since middle of September. And if we take a look here, there's your fibs we talked about a couple weeks ago, but here's your inverse head and shoulder neckline. We tagged that. Bit off, so your target is, and I'll just do it one more time in case you haven't been following, but we just duplicate that and take it to the breakout, and it takes us right to 400 where the 618 is, and it's also right into that, essentially kind of near that back sloping trend line. 200 moving average is up there as well. Well, at the time it was closer to that area. Now we should get above it if we were to back test that, but those are your targets here in the short term. Max upside to me would be up into this range. So this down sloping trend line here and the 200-day moving average plus the back sloping trend line there. That would be, I mean, if we went up there in a straight line with minimal pullbacks or pauses, I mean, you'd have to take a short there. I mean, that would just be too much of a no-brainer here. Even if, even for just a pullback, which I think we'll get more than that off of it, but that's your kind of levels here. That's kind of what I'm looking at right now. Yeah, I did have to stop out of some shorts this morning. It is what it is. You can't win them all. Sometimes you got to take that, and that's part of the game. So had a great year so far, and just keeping it going here. You got to manage risk. That's part of your insurance policy. And yeah, you just got to take it, roll with the punches. I didn't think we would have, I mean, now I talked about yesterday seeing that, yields bidding up, or bonds bidding up, but I didn't think we would have this much of a reaction. I mean, I thought maybe, okay, might go up to 385. Maybe we'd get to the 100 MA and then stall out. But I didn't think we would gap up. I mean, guys, the spiders were up 20 points today. We closed at 374.13. We closed at, yesterday, we closed at 394.69. 20 points. So that's a lot. Now, what I'm going to get into here, because this is very important. So I'm just going to bring over TradingView. I talked about this earlier today on Twitter. So 2s and 10s didn't really do much. Actually, just kind of backed off. 10.30 got a nice bid, and or 5s and 30s got a nice bid. 10s and 30s did too, but this one is the big one. So 10-year 3-month, that got inverted very, very sharply today. Now it's down 35 basis points of an inversion. If you're not familiar, this is considered one of, if not the best recession indicators there is. Why this is important, or why it matters, you might say, well, a slowdown is good, right? That means the Fed's going to pivot and do all. Okay, well, not really. It just means that they're going to slow down rate hikes. There was already a 50 basis point rate hike priced in, or at least expected for December, as it was. And now it's basically kind of the odds of that have gone up it's very high. It's going to be 50 basis points. That's not cutting rates. That's not QE. Okay, let me repeat that. That's not a pivot. That's just slowing down rate hikes. Inflation came in at 7.7% today, guys. It's not like it crashed down to 6. It's still elevated. So with a recession indicator flashing the warning signs and a Fed that is still looking to hike rates, there's problems. So the market's really getting ahead of itself, I think. It's basically priced in the Fed doing full-on QE next month. Like, we're just going to shoot back to all-time highs. They're going to reinflate the tech bubble. That's not what's happening. So I think maybe bears were really offsides yesterday and going into today, but now like 7% on the Qs. Now the bulls are way offsides here. Do we have to do this again? I mean, we've been all year long, oh, the Fed's going to pivot. Oh, the Fed's going to pivot. Oh, the Fed's going to pivot. The Fed's going to pivot. And they never do. And just last week, we rallied from, whatever it was on the FOMC all the way up to 388 on the spiders. And Jerome Powell saw that, and he went in complete hawk mode. And now we're above that level. And the word that he repeated over and over in his press conference was pain. Pain this. We haven't had enough pain. We haven't had enough pain. There needs to be more pain. And now the market's just like, oh yeah, let's go higher. Like, he didn't just say that a week ago. So I'm not in the camp. This market's still a bear market rally, but they can go on a lot longer than you think, and they can go higher than you think. And we have to respect it in the near term. Bond market is closed tomorrow, so we're looking at, I would think we probably pause tomorrow. It's hard to say. I mean, I would give the market an upside bias tomorrow just because the bond market is closed. And I would think the big boys have probably moved. They probably already left the office, and they're not going to come back till Monday. So maybe we're up tomorrow. Maybe we can get to 400 tomorrow. I don't know. But I would give the market the upside bias now because we got a strong close above that pivot there on the spiders. And, the Qs got above the 50 MA finally. Really the first time since the 12th, which that was actually a fake out. But so, I mean, that, there's nothing to say it couldn't be a fake out here as well. But the spiders did make a higher high versus kind of this move here, so it's a little bit different. But either way, wild action, and I think the market's way ahead of itself here. There's just no way the Fed's gonna do QE now. And the market's basically priced that in at this point. As far as our sectors here, semis up big on the day, 10%, over 10%. Nvidia was up 14 there. AMD breaking out of that channel there, 14% on there as well. Intel up 8%. So semiconductors showing some strength. That will have some resistance around that 217 pivot right there. 218. And then after that, of course, you have the 200 moving average, big sell bar. There's a wall of resistance up there if you were to get through that. IGV finally got a nice bid. This is still not strong at all. Cloud is still very weak here. despite the bid today. And you're kind of going into a sell zone up here as well. That was rejected before. Granted, you've hit it a few times, so maybe it can break. But it's still a little bit on the weaker side. It did get above the 50 moving average today. So we'll give it the benefit of the doubt for now, but it's not really a pattern of strength. Dow transports getting above the 200 and closing above that. We'll see what it does tomorrow. Again, still a lot of resistance up here. I have to think it probably wants to back off. You got a pivot there and then a red bar above that, so there is resistance there. And this is also getting just a little bit stretched anyway. But nice move there for the transports. I know Jets. Yeah, Jets had a nice day, up almost 5% there. So basically just shy of that 200 moving average there as well. But nice move for the transports. Obviously rates much lower here. The 10-year basically came all the way down to that 50 moving average. I don't know how major that moving average is, because you've been parallel to it for a while. So I think it can get through that and probably retest that back sloping or upsloping trend line. And so you got this one here, and then the inclining one just below that. So those are going to be kind of near-term targets possibly for rates. And then, of course, there's that pivot right there. So there's a lot of support in here for rates, but they did back off nicely today. Obviously, we talked about the 2-year. That got above this kind of trend line. Let me be clear, though. Unless we get follow-through, which we very well could, the trend is still way down on this. Like, getting above the 20 moving average does not mean anything at this point. We got to get above the 50 and then, confirm it and have a dip buy and put in higher lows before we talk about any sort of sustained rally. But nonetheless, it was a nice day. ZB here, 30-year, up 3.87% on the 30-year futures. So again, and this too, it's a big move, but the trend is still down big time. So, again, nice move there, but still has a lot of work to do going forward. HYG, just because we brought that up yesterday, that head and shoulders did not follow through, but this is still, hasn't made a higher high, and you're still in this channel. So I'd be a little bit careful with HYG here. Definitely a little bit a sign of weakness, though. I'd rather see HYG outperforming than underperforming. So again, that kind of, leads into the theory that the Fed's not really going to do anything, because if they were going to full pivot, they would be supporting junk bonds, right? But in any case, HYG still up over 3% on the day. Home builders, big move, outside move. So that weekly bear pattern is now basically invalidated. It doesn't mean it can't go lower in the future, but you had a nice outside day there on the XHB. Same thing with ITB. And then we've been tracking the VNQ. That triggered. So finally, we've been talking about this inverse head and shoulders. That triggered with a gap and go today above the 50. Up 7.3% on the day. Good volume there. So, that's going to have I would say 90, 90, 50. Right in that area is going to be good resistance, 100 moving average right in that area. But VNQ finally getting up off the canvas. Nice move there. For that, financials, XLF, a gap and go above the 200. I think this is way overbought anyway. This is coming into resistance as well, but you got to respect it right now. XLF up nicely, XBD up as well. Some of these financials like Goldman, this is like getting absolutely absurd. JP Morgan as well. But we got to respect them for now. Just way overbought. Even could make a case. This is kind of a blow-off candle here, especially on GS. And you also have to figure if there's, like I said yesterday, if money rotates to tech and out of things like XLE, you have to think that it's probably going to come out of XLF as well. And by the way, XLE, which is kind of what we're going to get it over to next, this is only up 2%. So we definitely saw, I think, rotation here to an extent. And I said that was a possibility yesterday with XLE being soft, even with yields up. And we're seeing XLE kind of underperform today. So maybe a little bit more, maybe needs some more profit taking. Again, if you guys know my thesis on energy anyway, it needs to pull back. These energy stocks are just stupid overbought. Oxy got some of those losses from yesterday back, but a big sell-off yesterday, down 9%. As far as crude, kind of it's a little doji here. So again, looking at crude, you wouldn't think anything happened in the market today. But again, it backed off here. It looks like that head and shoulders on a weekly basis is not going to, or inverse head and shoulders, I should say, is not going to play out on a weekly basis unless we have a big surge tomorrow. But we'll see what happens. They're not doing the SPR drain anymore because the election is over. So that's a tailwind for it. But for right now, if the market starts forecasting a recession, that could be a headwind. So it's a little bit kind of a dual-sided thing going on here with crude, and that's why you saw the pressure in XLE really the last 2 days. I mean, yes, XLE was up, but not like the rest of the market anyways. Okay. Natty, let's look at nat gas. So again, yeah, nice 5% up day. This pattern is still absolutely awful. I wouldn't even touch this right now. Maybe on a higher low or something of that nature, but right now this is just way too sloppy for me to touch. It's just all over the map. I can't really do anything with something like that. It's just, especially with something this volatile. But, you know, if I see a good level on nat gas, you guys know I will let you know. Dollar. So finally, now you can finally make a case. Now you can finally make a case that you have something on the dollar. So we got outside of that channel, and we're below that inside bar low. If we get back above it tomorrow, if we bounce back up above it tomorrow, it can be saved, yes. And if we have a slowdown, but the Fed doesn't do, you know, QE, right? They just slow down hiking. That could still be bullish dollar. So just bear that in mind. But dollar finally putting technical damage on the chart for the first time, really since 2021, the beginning of 2021. So we'll keep an eye on that. It's below the 109.40 level, below the 100 moving average. Trend is still up, but it does have a little technical damage on here now. We'll be watching tomorrow's close with great detail and watching what that does here. Gold, obviously up, as you could imagine. So up 2.66% on the day. Nice bid. Gold here coming off the lows. I mean, I'm trying to think of, yeah, you're going to have a little resistance around, 1785, and then the 200 MA up there. But a nice bid for gold. GDX, huge surge today, up 7.5%. Most of you guys know I own Newmont. Some of you guys own it with me. That was up 7% on the day, and I love that failed breakdown from last week. That got a huge bid today, and that was very nice to see this morning. Silver up nicely as well, up 2% above the 200 moving average. It may need to do some backing and filling, but I think this wants to get up to that 23 handle here. I think that is the next target, but nice move there for silver. Love what that is doing, and platinum just continues to surge. What can you say? Just blew through that trend line. Got all the way up to 1050 there today, and that's where it stalled out. Again, I had 1025 penciled in, but that really pushed through that. So platinum continuing to be strong, and copper strong as well, up 2% on the day. All right, and then Bitcoin. So obviously that got some relief as everything else did, up 12%. So almost an engulfing reversal. And we talked about this yesterday. Like it's got a bid up now. They've got to save it now. Otherwise it's just going to be too late. It's still got a lot of work to do here, but this is a good sign, at least in the near term. So, you know, you got to really get back above that 20,000 handle. That's kind of where you broke down from. So if you get back above that, you know, maybe you could get a squeeze in here in Bitcoin. Same thing with Ether. Nice little, that it almost does have an engulfing reversal. For that, I'd probably see you'd want about 1450, I think would probably do it. Definitely 1579. That's really that red bar high there. But nice reversal there for the cryptos. Look at Doge here, up 20%. Polkadot. Let's look at Solana. That was getting hammered. Yeah, up 30% on the day. Geez. So crypto is getting a big relief here, which is insane, right? FTX goes belly up 2 days ago, and now it's just slammed the bid. Pretty amazing stuff here in this market, but still has work to do. It's not out of the woods yet, but you know, if you can get back above that level, then it has a good chance of putting in a squeeze. So anyways, yeah, let's get into some questions here. Yeah, it's not healthy at all. I mean, I think we got to at least get up to 400. I mean, that's where the measured move should take you. So I think that's going to at least happen, and then obviously your next target would be around that 410 area. And if you go up there in a straight line, I mean, I think you got to take, if you're going to short anywhere, that you got to take a stab there. And yeah, the dollar, of course. The dollar was, you know, that's the main driver of it. So basically, the dollar's, you know, pricing in, I guess QE, because and this is what this is what kind of escapes me here is, it's not like the Fed is stopping hiking. So I guess, but you know, you can't fight the tape. It is what it is, but we'll see what we get moving forward. I don't know. I don't want to say, I don't know if crypto's, I mean, I still think, you know, Bitcoin probably has to go to, it probably still wants to go to, you know, 12,000. That's where I've had penciled in for it for a while. And you had a nice relief. I still think this is just a bear rally. We never put in a true bottom. Besides which, all the other things that I've just said about the Fed and recession. And it, like, I mean, it's not like we're seeing deflation here. Inflation came in at 7.7%. It's not like you know, this is gamma. It's market makers. A lot of people being short. That's the only way you can get up 7% in a day. That's really, yeah, on the triple Qs. That's the only way it can happen. It's not like J.P. Morgan saw the CPI print today and just decided to buy the gap up. It's short squeezing. So this is a mechanical move, and that's what short squeezes are. Yeah, and the 3-month is yielding, yeah, it's inverted by 35 basis points. And you know, the 2-year was green today, but that's still inverted to the 10-year by 52 basis points. So it's not like, yeah, I know bonds got a nice bid today, but the inversion is still deep in there. So nothing's really changed here. But you got to respect the rally in the near term. You know, you can't fight the strength. And again, I think we at least get up to that 400 handle on the spiders. I mean, that's, to me, it's so close to there anyway. It's probably where it wants to go. But I mean, a 20-point move today, that's definitely does not happen often. Yeah, I still think gold can do that. Oh, hold on. Let me get to... yeah, if you're short here and you didn't close them out today or this morning, I mean, I think it's gonna pay off anyway. But just be prepared for some more upside. You might want to average in higher. I would say start at 400 and then really 410. Assuming you can handle that risk. But I did close out most of mine this morning. The ones I have are just the ones that are either really extended or stuff that I think is going to rotate. Or or stuff that I'm already way in the money on. But going to gold, yeah, I still think, yeah, that's still going to happen. Nothing's changed. It's just a big squeeze here on the back of the 30-year being up. And that's another thing too. The 30-year was up a lot today, like TLT. So, I mean, I think that's telling us that, like, that's definitely confirming recession. You know, what do you do when there's a slowdown? You buy the long bond, right? Everyone knows that. So the long bond being up that much, you know, that does kind of support that theory. But I still think, yeah, gold's going to have that flush out though. Goldman can drop any day. I just don't know. I don't know if it's going to be next week, but this should drop any day now. By the way, this trend line that you're looking at, that's what it is right there. So it's back testing that now. But this is like as overbought as I've seen anything. And when this comes down, it's going to come down fast. This built no support on the way up. Yeah, and this is just it's short squeezing. Another one that's I might be looking at too is like GE. You know, you get up into that 88, 89 area. That could be a good short there. I've been watching that one as well. Yeah, it's hedging. The thing with so Kevin, you're talking about the VIX products, but the thing with like the VIX products is, yeah, you're seeing VIXy kind of uptick here, but the actual VIX was not really doing a whole lot. Now, if you saw, and I watched for this morning. I was watching this all morning. As soon as we bid up, I'm just gonna use the VIX futures because it trades 24/7. But when we dumped out, and the ES bid, I was watching for this. If this started to diverge and started to bid up with the ES, then I would have been like, okay, we're shorting. We're not going to sell our shorts, and we're probably going to add, if anything. But I didn't see any problems. VIXy, the thing is, it's these VIX products, VIXy, UVXY, they look at short-term VIX futures, and the actual VIX is short, medium, and long-term put together. So short-term volatility is upticking because we just went up 7% in one day. So a pullback or something of that nature is probably being priced in. So I wouldn't make too much out of that right now, but yeah, definitely watch the VIX. If this starts to reverse and the spiders are moving up, that's a huge red flag. The miners will go down with gold, yes, but I don't necessarily think they even take out the lows at this point. Or if they do, it won't be by much. The miners have been leading gold for literally months now, and I've been showing you guys that on the charts. Like, go back to July 25th here on GDX, and then look at gold. It's right around that area. And then gold made this triple bottom and lower lows, and GDX made one bottom, and now it's been making higher lows. So GDX has been holding up versus gold. And you can see the same thing even with SILJ on silver. This has outperformed the price of spot silver really for quite a while now. So again, the miners have been telling us that this is going to happen. But yeah, I think it will go down. It's just not going to, I mean, obviously it's going to go down, but I don't think it's going to go down as much as the metal. So Max, so let me tell you, I know it looks strong right now, but I've seen some times where you see a candle like this, or, you know, for instance, like this one, or right here, like right here. This was an FOMC rally. That looked pretty strong, right? You got a bottoming tail, you got a huge surge. This is like 100 point, 413 to 429. And the next day we gapped down and it completely reversed it. I know it looks strong now, but this market's volatile and it's fragile. There's not a lot, like the liquidity is really bad right now. And this crypto problem hasn't gone away. Like, it's not like all of a sudden this FTX is just back in normal. The news has gotten worse. And we don't even know the full story. There's more, I'm telling you, there's more out there. It's not like, Credit Suisse was like a month ago, and that was just swept under the rug. I'm telling you, there's going to be more crypto desks like this pretty soon. Like, this type of volatility is not healthy. Not at all. You can use the cycle course. I use the cycle course for day trading. I literally, like, there's stuff in there that you can use for day trading. You can use it on any time frame. Bill, no, I don't think there isn't one for shorting Goldman. You could do the best you could do, really, I think, is like SKF, which is 2 times short financials. You could do FAZ, which is 3 times, but just be careful with this because it's obviously 3 times. Do not use a huge position. But I think the risk reward is just like too good. I mean, Goldman's the biggest, and that's the reason why the Dow is outperforming. Because Goldman's like one of the biggest, I think, like a top 3 stock in the Dow, and Dow's price cap weighted. Goldman's gone from 288 to 378 in like a month. It's like 24%. And this is a big cap, like dividend stock. Like it's a you know, it's not Tesla. It's not Carvana, which you guys tried to tell me I shouldn't do anything with, but was up 30% today. But Goldman, I mean, and JPM too. I mean, it's a little absurd. Then this is a short squeeze. You know, when you don't build any supports like that, it's just squeezing. Yeah, I was watching the industrials today. Yeah, I mean, I wouldn't have a problem with it up here. If you're up tomorrow, we gap up tomorrow. You got to pivot here. I don't have a problem with this because you got pivot high right there, and then right above that you got that red sell bar. I like those short setups. I like that, and this is wicked extended. So yeah, I wouldn't have a problem with that. You know, maybe do like a small position tomorrow, and then if it pierces through that, I wouldn't have a problem with you doing that at all. $1? No, it's not. It's not in a downtrend. It never closed below the 200. I mean, it closed below the 100, but you can close below it one day, and it doesn't necessarily make a trend. When you look at the weekly, even now with all this, that's technically like a breakdown if it holds by tomorrow. But look at the trend. I mean, it's still way up. So it's got a little bit more work to do, but this is definitely technical damage. You won't hear me argue that. But I wouldn't say it's a short-term downtrend maybe, but not big picture, it's still up. Yeah, exactly. A mechanic. Yeah, you're exactly right. And I'm glad you said that because a mechanic saying inflation is still higher year over year than the Fed rate hikes can counter. Exactly. And you guys heard me harp about this constantly over the last, since like August. Every time they hike, the 2-year just keeps going higher. So like, you know, like the last time they hiked, the 2-year went up another 33 basis points. So they still have so much work to do at this point. Now, I guess my guess is their hope is that the market starts to do this on its own, and the 2-year the yield starts to come in close enough to the Fed funds rate, then they can stop. I mean, I'm not convinced that's going to happen, but I think that's what they're kind of hoping for here, because they know they can't. I mean, they could do a 100 basis point hike and get it up there, but then the market would probably freak out. No, I wasn't, Jerry. I I talked about it on Sunday in the members only stream, but I was joking about that. But some guys, some of you guys were arguing with me like, "Oh, Carvana sucks." I'm like, I know they suck, but I mean, it's like 40% of their float is short. So all it takes is one good news day, and this is what you get. Bang! Look at 31%. There was a bunch of other things up today too. I think Twilio. What else? Yeah, 16%. There was a bunch of all those growths. I mean, ARK was up like 12%, 14.5%. And this is still barely, I mean, this is still almost at the lows. let's see if there's anything else. Trying to think if there's anything else I really feel like we need to look at. I know Tesla was kind of weak today, so it came out, I don't know if you guys heard, but yesterday he did file a few stock sales again, and we were short this a week or two ago. We made some nice money on it. This is still weak though. I mean, yeah, 7% in a day is not, you wouldn't think that's weak, but for Tesla it is, considering, you know, like what the Qs did. And what everything else did, like this, you know, take a look at Tesla. It barely upticked all day long. It barely even closed at the highs of the day. So he might even still be selling. And don't trust Elon, because that guy has said multiple times, I'm done selling, and then he sells more, and he just doesn't get in trouble for it. So, but yeah, I kind of like this. I know somebody brought this up earlier in the forum, like an hour ago, about re-entering it short. I would wait until about, you know, at least 200. So like right in this area, that's where you broke down, right? I would wait till right here, the 20 moving average down sloping, you know, and it could get up to you know, maybe 220 to back test this trend line. Again, so you can see the trend line there. But I would wait for that, because it probably wants to coincide with either this level here or this level here on the spiders. And if you can get that to happen, then it's, I would say it's a high percentage trade. You probably could take that. Let's look at PayPal. I don't know. You know, I don't know what I would short it here. This pattern's just kind of, it's been sideways for what, like 8 months, 10 months. It's just hard to, I mean, you could make a case, you know, you can make a case, you got a trend line there. I mean, you could, I mean, if you know, if you got up there tomorrow and you wanted to short scalp it intraday, I wouldn't have a problem with that, but I don't know if I would short it just like for a swing. Yeah, I talked about semis. That's got upside to at least this pivot here. So you got pivot high. There's your sell right there, and then you came up here, back tested. So right around 218, 220. Then if you can get through that, okay, you know, the 200 moving average, you got a red bar up there. Weekly 50 is all the way up at 240. I don't know if we can get that high. I doubt we can get that high, but yeah, those are the levels there on the semis. Nvidia had a big day. AMD had a big day. You know, 14%, 14%. You know, KLA 10 core up 9%. AMAT 11%. TSM, yeah, 9% there. Micron, yeah, they all looked good today. I'm very interested to see how oil trades here, though. Again, I know it's like when you backed off of this trend line, I'm really kind of neutral on it right now, but it's hard because you're kind of in this. There's that nexus of like, all right, so we got the SPR release is over with, but then if we also have a slowdown, is it gonna, like, which one of those is gonna like win in the near term? But we do have and the election too. That's another thing. So the full results aren't out, but I think if the Republicans win, it's a negative for crude, at least in the short term. But yeah, interested in that. I'm still interested in this trend line. If they flush it down here, I'm still interested in that. So that's not off the table yet. I don't use spreads that much, and I don't even trade options that much anymore. I just use commons. And honestly, you'd be surprised at how much you can actually make just trading commons. You know, I used to think you have to trade options to make a significant amount of money, but you really don't. With commons, like, you can hold on longer. So you don't have to like worry about, oh, you know, I bought calls on crude and then it went sideways for a month, and now you're losing money, and you're like, should I sell it or should I not? I still like the pattern, you know. And I understand that, yeah, if you use spreads, it's a little bit different because you can like create, you know, you can go short, you know, short one, long one, and collect the theta. But for me, it's just easier and simpler to just buy commons. And if you know how to position yourself right and use the right amount of capital, you make plenty of money. I mean, I'll tell you right, I make a living off doing it. So, and I didn't start with a big account. Yeah, I mean, I'll play options like every now and then, like certain stocks. Like, I'm trying to think of a good example. Like maybe like Visa, right? Like, so like Visa is like not a sexy stock to play, right? Because it doesn't move that fast. Or like, you know, McDonald's or something. Like, well, that's a kind of an uncharacteristic pop, but let's just use Visa again. But like, so let's just say you have a great pattern on Visa and you want to just long it, but you know, you look at the upside and it's like, okay, well, 210, if it goes up here to 225, it's like your max upside is like, you know, 5%. So using commons there to make that worth it, you'd have to use like so much of your capital to make it worth it. But, you know, then that's where calls come in, you know, and it's like, just buy the calls instead. If you get a favorable enough spread, or, you know, if you can get filled right, it can make it, you know, much more worth it. Like, hey, this is only a 5. We did that with Verizon last year. I had, you know, I was like, Verizon, I was like, I really like this pattern. I was like, I really like these patterns, but, you know, $52 to 54, that's where I was targeting it to go. I was like, that's nothing. Like, that, you know, I would have to use so much money to make it worth it. But we bought calls, and, you know, we made like 85% or something like that on the calls. You know, so it's like, it was still a good pattern. We just, you know, used options that way. Or sometimes I'll play around with them, like, you know, sometimes for day trading I'll mess around with them, but not that often. Not that often anymore. I used to, you know, when I was younger, I used to be a cowboy, and I learned not to do that that often. But I mean, I know a lot of guys who do play options all the time. But and if you're good at it, do it. If, you know, I'm not going to tell you can't. But you know, just know that there's other there you can. It's amazing how underrated commons are. Just throwing that out there. By the way, speaking of Verizon, holy crap, man, that thing's gotten destroyed. And AT&T, yeah, AT&T is actually coming back okay. Hey, what's up, Frank? Yeah, he's taking money out of the piggy bank for sure. I mean, there was one day, I think it was right here. I remember, yeah, so it was April. Yeah, April. No, it wasn't. It was sooner. It was in August. I think it was one of these days. I don't remember, but I saw this really great day trading setup on Tesla, and I was like, all right, you know, I went long, and it just kept going down. I was like, what the hell's going on? Like, there's no, like, this should work. I had like 5 factors, And then I ended up holding it overnight, and I ended up making money. But then it came out a few days later. Oh, Elon sold, $2 billion or something like that worth of Tesla. And I was like, oh, that's why my level didn't work. He was unloading all his shares. Yeah, I don't care if you use margin at all. I mean, like, just understand the risks. Like, so if I'm day trading and using commons, I'll use margin if I'm like scalping sometimes. So, just a in and out. There's not really a good example because there wasn't any scalps today. Everything was just straight up. But, we're just looking for a quick pullback. I don't have a problem with you using margin on that, but I tried not to go too hard into it. Yeah, it's good. Oh, yeah, this is straight up. I'm not even sure what these guys do. I mean, that's not a bad digestion pattern. Big up move, parabolic. He had to work off the overbought condition. Got right back down into that breakout area. Yeah, that's not terrible. This is still working off. This might get down to 52 eventually. But the other one, that was a nice retrace, though. Yeah, Upstart, that was the other one. They had a really big day. And that, look at that. So they got everybody to capitulate right there. It was almost like Roku a few weeks ago. Yeah, they gapped it down and then it just ran right back up. Let's look at Snapchat. I thought that one was interesting. You know what? I thought about picking this up when they gapped it down on earnings, but just because I felt like it was like enough is enough at this point. And lo and behold, there it is, back above $10. Yeah, Cloudflare up 25%. Cloudflare is actually a pretty decent company, but they've been under a lot of pressure lately. Like cloud in general has been. Oracle, I actually think, is much better. And I noted that a week or two ago. I do like Oracle has held up a lot better than the rest of the cloud stocks. Adobe, CRM, very soft, very soft. ServiceNow, very soft. Trend is down. Oracle's actually holding up really well. So if you had to pick one, yeah, I would say this, but it's got to do more backing and filling here. So you see this pivot, 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 pivot. We're below all those. It's got to consolidate that. Like, it's got to do more consolidation to get through that. But it's definitely the strongest one out of those cloud names. I mean, Atlassian. I know they got walloped on earnings. Trade Desk, that was up nicely today, but I mean, the trend is down. You're just holding a double bottom. But yeah, Oracle. If you had to pick one, I would pick Oracle. Yeah, well, it looks like it failed, though. It had a head and shoulders there, and it triggered, but it looks like it failed. Yeah, Bradley, thank you. Yeah, give the video a thumbs up if you're in. Appreciate it. Appreciate it from everybody. Yeah, well, that's right. That's what Biscayne, you're right. The bigger the piece of garbage is, the bigger the move. That's why, I said in the members only stream on Sunday, I was like, we traded Carvana like 3 times earlier in the summertime, and we made a killing on it each time. And when it dropped down the other day, I was like, if this gets low enough and the Qs are into support, I'll pick it up. And some of them are like, why would you do that? I'm like, at the 40% of their float is short. Like it's gonna like, all it takes is one good news piece to come out and it's gonna do one of these. So we didn't even get news company specific and it was up 30%. That's how crazy it is. TSN. Oh yeah, Tyson. Man, they've gotten hammered too. I am not sure about this name either. Is that is this that IMMVD? I'm not sure if that's what you were talking about. Boeing. Yeah, that's a squeeze too. This is overbought. I hate trading Boeing because it never does what I want it to do. Like even when I think there's a good pattern there, like a really good pattern, it just never. It's like one of those stocks that it just always does like what it shouldn't do based on what any stock normally should do, at least for how I trade. But it's it's up into resistance here, but you kind of already almost hit it once. Now you got a higher low, so I would give it the upside bias to maybe close to 190. It's a tough. There's a wall at 187, 188. So maybe that's where it wants to go. But yeah, it's overbought just like everything else is right now. Well, not everything, but a lot of things. Morgan Stanley was it? Yeah, they probably were. Yeah, they tell everybody, yeah. They tell everybody it's going to zero and then they're buying it underneath. Yeah, exactly. Yeah, okay, so I heard you. Yeah, it's okay. So, yeah, 410, I mean, I can't see us getting through that, honestly. I could be wrong. I haven't been wrong really all year other than like with timing, but this is not a bottom. It isn't. So, and that's really what it comes down to. Aside from all the other macro stuff I talked about, this is not what a bottom is. So yeah, it gets up there. I never like telling people what to do with long-term holdings, but I mean, I wouldn't fault you for it at all. Supply and demands. I mean, like, so I don't really use zones. Like some people use like boxes. I got all this crap on here. Sorry, let me just pull up a different one here. There we go. Like some people use, like you're talking about like this, like let me use something else. Yeah, here we go. You're talking about like, okay, here's a, well, this would be like an air pocket, but you mean like the boxes? I don't really use that. I mean, like I kind of do, but what I'll use is, I mean, you've seen my spiders charts here, like you'll have like one here, one trend line here. So yes, this is technically like a demand or a supply zone if you're coming up into it, but I just go by each individual level. Yeah. I try to just be a little bit more precise with my entries. So for like me, oh, and by the way, speaking of, I didn't even mention this, but there's a ton of supply right there. And guess where that lines up? So you sold off, came up, sold off big, and then you retraced. So everybody who bought there, they're trapped. They're going to turn into sellers once you get up there. That's why you sell right here. Yeah. For oil ETF, if you're a little more conservative, you can use USO. But I like to use UCO. It's a two times long, but just be careful because this can get volatile really fast. The only thing with these though is do not hold them for a long time because they will burn a hole in your pocket. And what I mean by that is, look at where the USO was in 2008, and then look at crude in 2008 and where it is now. So there's a lot of depreciation due to contango contracts. Yes, UCO resets nightly. Yep. But so does USO. Well, no, I'm sorry. USO doesn't, but it resets on contango on futures contracts. Like UNG. We almost got screwed a few weeks ago. We had we didn't have UNG, but we had Boyle, and I think it was like this day or something. But that day where Nat Gas gapped up on that futures rollover right there, we had Boyle, and I was like, son of a, because the contango rolled over, and we were almost red that day on Boyle. So I ended up selling it on the open because I knew the gap was going to fill. But yeah, those contango ones they're a pain in the ass sometimes. Let's look at FNGD. Oh, and that's a 3x. Yeah, I don't know if I would do anything with this right now. But all right, I got to get going here. I realized it was almost 5:15 already, but yeah, great talk. Yeah, so I mean, I give the market the upside bias to at least 400 right now. It's probably where it wants to go. Bond market is closed tomorrow, so we might get a low volume kind of float day. It might be an inside day. It might be a pause. So we'll see. But yeah, I do think at least short term we get up to 400. This up here is kind of like a bullseye if we can get up there, but we'll see how it goes. So yeah, anyways, guys, yeah, gonna wrap it up here. Thank you all for coming out. Thank you guys. You guys take care. I'll talk to you all tomorrow.